Okay, a good Tuesday morning, everybody. David here, and let's start digging in. Um, I've got sort of a special update that I want to share with y'all today about the bigger picture that we're in and taking a look at this overall decline from the January all time high into the June low, right? Sort of voodoo tree line to voodoo tree line. Now, one of the things that we've been talking about over the past several days, right, since a few weeks ago, we got above the voodoo fire line, tested and held it for support and continued up. We talked about how, particularly if we see the exact behavior that we saw, right, testing first the fire line from above and holding, and then the smaller degree voodoo skyline from above and holding, that so long as that persists, we can continue to see this working its way away from that fire line and towards the next level of significance, which would be this voodoo snow line up here, which you can see that I have a cluster of other levels nearby that we'll talk about in just a minute. But for now, right, that snow line is at 43.51, and of course we know that that is also right by a level of some psychological significance in the form of the 4350 round number. So that is certainly going to be an area of an interesting hurdle for the market to get through, right? It's got a powerful voodoo line level, not as powerful certainly as the fire line that we've held, nor the tree line that turned us up from the June 17th low, but important nonetheless, right? It is a place where if we were going to turn down for a short term pullback, that it would be meaningful to see that coming from there. Perhaps just to pull back a little bit, but also perhaps just to um, perhaps to turn back down if that were to send us through the fire line and get resistance underneath that fire line level. So that's always something we've been talking about for a few weeks that would send us back down, getting resistance back under that fire line level. And we can look at this as we try to every day from the lens of all of these tools that come together to work together, right? That would be the voodoo lines, that would be and the voodoo roadmaps associated with those lines, like the roadmap we just talked about that works its way upwards from the fire line so long as we hold support above the skylines, right? And our Elliott wave analysis and our Fibonacci analysis. All of that works together. Now, one of the things that we can notice from our Fibonacci analysis is that if we focus on the overall move down from the January all-time high, scaled right, from the January all-time high into the June low, the pullback low from that high, the 61.8% retrace of that move is right in here, right? Just above that 43.51 level. Now, we know that that 61.8 retrace is important, right? That is one of the most significant, might say the most significant of our Fibonacci retracement levels, right? That is the golden ratio. That is phi, right? 38.2 is going to be right, phi squared. It's not it's certainly very significant, not as significant. Right? So phi 61.8 and also phi 161.8, 1.618 if you prefer, right? It's inverse. One of them we represent with the lowercase Greek letter phi, the other with the uppercase Greek letter phi, and both the inverse of the other. That is an important spot, right? So now we're starting to get a number of levels that are lining up in the same place. And so that is reminding us that this is an important area to watch, right? Now, snow line, right, is in here at 43.50. The 61.8 or 43.51 and 86 cents, right? The 61.8 retracement here at 43.67 and 19 cents. So, 15 points and change away. With the time frames and the price scale we're looking at, that's relatively close together. Now, there are a few ways to look at this, right? As we layer in the Elliott wave picture. The Elliott wave picture tells us that, right, moves in the direction of trend have a 5-wave structure. Moves against the trend have a 3-wave structure or a combination of multiple 3-wave moves. And so certainly one of the things that we've talked about, let me turn off some of these less significant voodoo lines as we start to take a look at this. Right? One of the things that that we look at in terms of Fibonacci informing our Elliott wave analysis is we just step back and we look and we say, okay, we had a leg up from the June 17th low, this initial leg that traveled into this June 28th high. And then since then, our biggest pullback is this one here. So we look at the initial leg up and then the first big pullback, and then analyze the next leg up from that big pullback. And that first leg up, after the big pullback, one of the things that we've talked about is, ever since last week, we got beyond the spot where this would be 161.8% the length of this move. And that does argue in favor of this being 1, 2, 3. It doesn't guarantee it. This could still be a corrective move up. This could end up being A, B, C. The proportions that we see are more consistent with that 1, 2, 3 interpretation. And the difference is that, right, we look for the counter trend moves to run out of gas, as I said, as 3-wave moves. And we count those counter trend moves with letters. So if this is going to be only a 3-wave move, A, B, C, the implication of my citing it that way, referring to it that way, is that I'm implying that there's not going to be a 4 and a 5, a 4th wave and a 5th wave, because 3-wave move runs out of gas at C, right? We count the 3-wave moves with letters. Whereas if I call it 1, 2, 3 instead, then we expect to see an eventual 4 and an eventual 5. And as I said, the behavior that we've seen, the proportions that we see from our Fibonacci analysis, shift the odds towards this 1, 2, 3, for 5-wave interpretation. Right? So it doesn't guarantee it. And the thing that would come in here and rule it out as I clean up my charts a little bit is if this, if we turn back down from anywhere in here, whether that's at our, current price right here, whether that's up from by the snow line that has some measured resistance that we just saw, right? Wherever it ends up being, right? That would, coming back down and getting below this swing high from June 28th, right? That would pretty much invalidate the bullish scenario. Now, we'd like to know before that, right? We don't want to wait until we get all the way down to the 39.50 area or a little below before calling this a turn back down. We would expect more downside from it, getting to back below the voodoo tree line. However, if we're going, and perhaps well below there, but if that's where we're going, we'd like to know sooner. And so we can certainly talk about that. But the bull move would be pretty much invalidated below that swing high from June 28th. But let's work on getting this a little bit better than that, right? So so look, this is an important level area, right? Because we have a cluster of a lot of fibs right here at 43.50 and above, right? Voodoo lines, which is based in part on Fibonacci analysis, and some important measured levels with respect to the move up we've already got, and the move down from the January all-time high. What we layer onto that next, right, is what this would look like in both the bullish and the bearish scenarios. So in the bullish scenario, as 1, 2, and maybe a wave 3 up that we're in now, maybe getting close to an end. We'll talk about that in smaller time frame charts in a minute, but perhaps continuing up towards some of these measured levels above. Right? It's already done enough to be an entirely valid third wave, right? It's more than 161.8% of the first wave, and so proportionally, this has done plenty. We'll talk about whether it's done enough from the pattern perspective in a minute as the bell rings. We'll get some fresh cash market data in a minute, and we will look at that on the small time frames, but it doesn't change the larger time frame that we're talking about right now at all. So the next thing we want to layer in and look at is what are other pullbacks that are sort of too big to see this as continuing up. Right? So again, looking at the combination of our Fibonacci analysis and our Elliott wave analysis. Two great tastes that go great together, just like peanut butter and chocolate. We saw earlier that Fibonacci analysis informs our Elliott wave, right? Seeing this leg here be more than 161.8% of this leg argues in favor of this being a trend move. Now, we'll use that in the reverse and let Elliott wave tell us or inform our Fibonacci and tell us that, okay, if this is a third wave, then the move back down subsequent would be a fourth wave. And what do we look for in fourth wave pullbacks for moves relative to the preceding third wave? Well, a retracement that is roughly 23.6%, a Fibonacci ratio, or 38.2%, another Fibonacci ratio. They're not generally as important as the 61.8 that we look to, right? One of the most important retraces. But when we're talking about fourth waves, which tend to be smaller, right? A 61.8 retrace is generally not on the menu. And so if we look at a 61.8 retrace of the move up from the July 14th low, notice that that gets, if it were to originate from today's high of the day, or sorry, yesterday's high of the day, right? The high of the move. Maybe we take it out today, maybe we don't. But if we imagine that things started from there, the 61.8 retrace pokes ever so slightly below that June 28th high. It's too big. Now, look, if we go up further first towards that 43.50 area that we talked about as being important, it would get, right, that 61.8 retrace slightly above that level so that theoretically we could retrace 61.8% of this move up and still have the pullback being a fourth wave. But remember, Elliott wave informs our Fibonacci, and it tells us to look to this 38.2% or 23.6% retracement. And if we look at where that would come in, if we were to pull back from today's high, well, the 38.2% retracement, which is the larger of the retracements, right, that comes in at the Voodoo fire line. That same level that we said we probably shouldn't get below if this is going to remain bullish. That's what the Voodoo roadmap says, right? The Elliott wave picture taken on its own says it's invalidated. Got to draw that line horizontally, right? The move up is invalidated below this swing high. But when we look at the typical Fibonacci proportions, it says look to here and here for retraces. And also, this would be the next smaller degree fourth wave in the move up, this swing low back here, slightly above that 40.83 level, right? Pretty much right by the, or just above that kind of 4,100 round number area. So the next degree fourth wave really shouldn't break much below there. So we have a bunch of reasons saying this area really should not be breached before we get a 4 and a 5 if we're heading up in a trend-like manner. Just another way of reinforcing that same idea we already have from the Voodoo roadmap, that the bull side should not see a move back below 40.83. Now, the other thing we know about these bullish moves, right? The 1, 2, 3, 4, 5, the trend moves, right? If this bullish move takes on a 5-wave structure, it's going to tell us that the trend is up, right? We know that this should not be done until we actually get that 4th wave pullback and 5th wave up. It doesn't need to come from today's high or even the 43.50 area that we've been citing, although it very well could. Right? But we know it's coming at some point. So we know that even if we're bullish, we're going to get a pullback at some point. It could come from much higher. Right? It could come from where wave 3 is 261.8% of wave 1, which again would be near a Voodoo snow line. Right? So, you know, there's no saying that this needs to be over, but we know there will be a pullback at some point. And right now, if it's from nearby, it should hold this area near the Voodoo fire line on a pullback. Right? So So we know what level we need to hold. Now let's look at these same observations from the standpoint of a bullish move, or sorry, a bearish move, right? So we said one possibility is that we have a leg up and a pullback and another leg up. And that if we get back below here, that would theoretically be a three-wave move if we come back below that June 28th swing high and then get below the voodoo line right below that, 39.17, let's call it, and that would mean breaking the snow line below this fire line, indicating that we're heading even deeper below it, right? But what I'm focused on here is because this is so much bigger than this, if we do turn back down, again, back below here, and it's not going to be a trend move, but there are other ways that something can look corrective rather than just a big ABC. Right? The other way that something can look corrective is a combination of multiple three-wave moves. And if we look at it that way, right? So perhaps a leg up here, a pullback, and another leg up. At that point, these two legs are roughly equal in size, right? And then from the snow line here on the pullback, right, another A, B, C, and this would have all the structure that we would look for: a five-wave move up here in A, a five-wave move here in C, a five-wave move in this other A, and a five-wave move in this other C. We haven't seen that yet, but we could measure where that runs into. And if we are looking at that, then we would look for this to potentially end near where this C wave in here is equal or roughly equal to this A wave. Where would that come in? Not too far above that 43.50 area, in here at 43.88. Meanwhile, right, generally, the first three-wave move and the second three-wave move are also generally similar in size. And where those would be equal is right in here at right, 42.86. We've already poked ever so slightly above that level here yesterday, right? But another Fibonacci proportion that's still sort of close enough to equal that it's more associated with corrective moves than trend moves is the 127.2%. So a three-wave move up from here to here and another one from here up, those would be 127.2 here at 43.88. Remember, this leg and this leg would be equal at 43.88. And so everything is sort of right in here as far as all the levels that we would look at if this is going to turn down counter trend and be counter trend. So pretty much for now, on a short-term basis, it looks like the trend is still up, and I promise you we'll go to the short-term charts and talk about where we would get signs that this is starting to come back in, right? But any pullback in here which stays in the range for a fourth wave, right? If we get A, B, C to the upside here, breaking below the B wave would be a sign that this is likely over. Remember, that's the same area and the Voodoo fire line just below it that we looked at a minute ago, where we said a breach of those levels would start to suggest that we're turning back down. It's a level which is important from the Voodoo roadmap perspective, because it would break the fire line. It's a level which is important from the combination of Elliott wave and Fibonacci, because the Elliott wave informed Fibonacci says, yep, 38.2 retrace, which is right by the fire line, would be broken. 38.2 of the move from here to here, and that level will just creep up as price continues up, if price continues up. So we're getting a very clear picture. It doesn't tell us exactly what path this is going to take, but it does tell us that from anywhere in here, if that move down breaks 4083 and finds resistance under that level, we're likely heading to the downside. Right? Meanwhile, any pullback that's only corrective in that range that starts to turn back up is going to be consistent with a fourth wave, pullback would be consistent with a fourth wave with a fifth wave up still to come. And while we would be susceptible to some larger pullback after that fifth wave, we would likely find it only being a retrace of this advance, finding support somewhere above the June 17th low, and then continuing with more upside. So while everyone's bickering back and forth about whether this is just a 50% retracement of the decline and we're about to roll over and go back down, right? And you know, and channeling, Michael Burry and who's had that, one great call of his life, and now everyone thinks that he's the guy who knows what the market's going to do at every turn, or the folks who are, really bullish in here. We don't have to jump on either side. We know what to look for. We know even if bullish, we're going to get pullbacks, and when we do, we look to the fire line. Why? Because our voodoo lines tell us to look there. Our Fibonacci tells us to look there. Our Elliott wave tells us to look there. Now, the next piece to look at, and this repeats some of the stuff we did yesterday, but let's take a look at it again. This question of when do we even start to look for those pullbacks, right? Because we said this could even head up to 4,500 or a little beyond, right? We've got the 4518 Voodoo snow line up there if the market wants to head there. We've actually got a lot of stuff up there if the market wants to head there. We've got the 4518. We've got the spot where the leg up from July 14th would be 261.8% of Fibonacci proportion of the move up from the June low to the June high. Right? There are lots of reasons to look there, and of course, if we look around here, there was and perhaps even a little higher in here, right around that snow line area. There was a lot of consolidation in that range, right? All through here. The market found acceptance there a few times within the way down. And so from a lot of perspectives, that could be a place we go to. So how do we get a handle on this? Well, what I want to do is I want to go back in and kind of look at the move up in shorter time frames, particularly the move up from this low last Thursday. Because the move down into that Thursday low was the third largest decline that we've had, right, since that July 14th low. And so if we turn down from near here, this move up from that low is a three-wave move. That's not what we're expecting, right? We're expecting that from the larger pullbacks when we turn back up, those will continue into five-wave moves. So that would mean 1, 2, right? Perhaps 3 is still ongoing. Perhaps 3 is shorter than normal, but if it's still ongoing, you know, up to higher, and then a 4 and a 5. But whatever it is, it's not a five-wave move if we end up back here. Sorry, this was last Tuesday's low, right? If we end up back below Thursday's low. So right now, we've got to stay above here to keep the immediate focus up. Perhaps, if we break this level, is just a revisit of this swing low from from last Tuesday, or even a visit to the fire line, but breaking below there is more meaningful. Between here and there, we've got these 4249 Voodoo Skyline, 4185 Voodoo Skyline that would imply a break of this level, and we can watch those, right? Yes, coming back down here, maybe just to revisit this skyline, but the Voodoo roadmap says if we break that, we're revisiting the fire line. And the bigger picture Voodoo roadmap says if we break the fire line, we're heading back down. So if we start breaking these on a short-term basis, we're going to start looking to see if this builds a roadmap down to the Voodoo fire line, and if we get support there, and whether we do is going to tell the picture. Unless 4250 breaks, let's keep looking upwards, right? So that's how I'm going to be watching this. On a short-term basis, this is done enough to the upside from back here, from last Thursday. We have kind of 1, 2, maybe this is 3, 4, and 5. It doesn't need to be that way, but it could be that way. And that says on a short-term basis, we've done enough. I would like for the leg up from here to be materially longer than the leg up in here in order to keep the short-term focus clearly up. But so long as we get a pullback that holds above here and the Voodoo skyline just above it, this could keep going to the upside. Beyond that is really paying attention to the short-term 5s and 3s. That's, you know, the hardcore Elliott wave, you know, watching the pullback from yesterday's high. And we can certainly do that, but it can be a bit of a head fake. But overall, I think the picture here is very clear and setting up, and it's telling us that we can just follow the Voodoo line roadmap here because it's telling us the same thing as all of the other techniques, right? And we just have to watch the hierarchical nature of the most important fire line, right? The snow line, not the next most important, but it's the next most important that's in play anywhere between this fire line and the all-time high, which is at a tree line, and then the slightly less important skylines between that fire line and the snow line. It lines up perfectly with everything else we've been looking at. So again, while I can't tell you, does this come back in and turn bearish, or does it remain bullish, I can tell you the proportions favor this more bullish view. Just looping this back in and recapping what we said. The proportions favor the bullish view simply because this is the biggest pullback since the low, and the leg up since then is more than 161.8%, the length of this. Not a lock, however. And getting back below the fire line could do some real damage. We know that even in the bullish case, this is going to be a 5-wave move, and it requires a pullback to be able to observe a 4th wave before a 5th wave up. So we know we're going to get a decent sized pullback. And furthermore, we know that if it originates, let's say, from yesterday's high, right, it could very easily be, more than 100 points, right? Potentially more than 200 points before turning back up. We need to see something of that scale and another high for the move before this will reasonably look done as a 5-wave move. So even in the bullish case, we're going to get pullbacks, right? It might not come for another 200 points up before it comes, but it should come at some point. But it would need to do much more than that to the downside to head down. So based on the very short-term patterns, holding above 42.50 on a short-term basis, this isn't part of our larger time frame, but holding above 42.50, I'm going to keep looking to the upside. Meanwhile, if we do come in here and break that fire line, I'm looking down. So that's, as I said, the clearest message I can see. I hope it makes some sense in terms of putting together all of these analysis tools that we use all the time in creating a comprehensive roadmap for how this is expected. All right, so so I hope you found that useful. If you have any questions about it, certainly feel free to let me know. Let's talk about it. But I think this will form the backdrop of everything we're watching over the next, at least the next several days, potentially the next several weeks. So that's what I've got. Henry will be here with you for the midday. I'll have an Elliott Wave dispatch update for you this evening. We can dig back into the short time frames, take a look at stuff there, and see what the latest looks like. And of course, Henry and I will both be back here with you for the open tomorrow. So I will see you then as well. Until then, as always, folks, good trading.